And good afternoon. Welcome into Market Talk for Thursday, January 14th, 2021. Great to have you with us once again. And thanks for joining us here today to talk about the markets. I'm your host, Jesse Allen. And you can find us online, markettalkag.com, Facebook, Twitter, Instagram. It is all at Market Talk Ag as well. All of our great radio affiliates from the Dakotas, Minnesota, down through Iowa, down to Texas, everywhere in between. We got a lot of great folks part of the Market Talk team. We appreciate them being a part of the family. Well, another bullish day in the grain market. We saw some good strength across the board. Livestock a little weaker. Let's talk about all of it. Let's bring in our good friend John Heinberg with Total Farm Marketing by Stewart-Peterson. John, good afternoon.
Good afternoon, Jesse. Good afternoon.
Man, oh man, we were chatting a little bit before we jumped on air. This market, we kind of took a bullish pause yesterday, or we took a pause from the bullish wave yesterday, and then today we got some export numbers in, and we just jumped this market higher once again. And of course, the Tuesday reports came out, and you and I haven't talked since then. What is your initial thoughts on those reports? I guess let's start there before we really focus in on today.
Yeah, let's break them down by commodity first off. Let's just go right into the corn market, which probably had the biggest surprises, obviously, in the reports overall with, again, seeing that drop in yield, 3 bushels per acre, a historic drop in the yield side of the equation from the November to January window. On top of that, the adjustment in grain stocks, again, going back and reanalyzing those prior reports gives us that miss, which obviously sent prices limit higher that day. Even within those numbers, USDA did take away from the demand side of the equation to get the carryout number down to that 1.5, 2 window, taking away 100 million bushels on the export front, 50 million bushels off of feed, 100 million bushels off of the ethanol side, at least in this window. Probably the only one I really buy is maybe the ethanol side of the equation, with production still staying underneath last year's levels. So that's what the market's basically kind of saying. We like the numbers, we like the trend, but at the same time, we still don't believe you. And then when you get export sales numbers like today, the thought of them taking bushels away from the demand side of the equation on the export front just doesn't seem like it fits the picture at this window. So maybe the market's starting to trade at 1.2 carry out versus a 1.5. And with that, prices limit higher and good surge in prices again today.
Yeah, very much so. Soybeans from that report pretty much seemed like things came in as expected. John, is that kind of how you saw it?
Yeah, pretty much right to the letter of what I was kind of thinking we would see, a little drop in terms of production. Grain stocks numbers fairly in line with estimates. And then on top of that, added 30 million on the demand side for exports, but a little bit more on the crush side. I think those are fair moves. But then again, are we truly where we need to be on the demand side of the equation? With the export numbers today, we're now about 91 to 92% sold on that new USDA target. And realistically, are we still rationing beans at this price? The question is no. I mean, the rumor today that probably brought the strength in the market was Chinese were stepping in, picking up some corn and beans today. Now we'll see if that gets verified through some of the flash sales tomorrow or the next day. But at this time frame, we're still moving product out quickly, and with the sales numbers where they are, that we'll probably have to add more onto that export total for beans, bringing that carry out even lower. Biggest thing, though, is stocks to use, 3.1% now for beans for the marketing year. That's the lowest, in-season window, talking from January through probably the June window we've ever had, eclipsing the 2013 and 14 mark. Now, 2013-14 did end the year at 2.6. So you look at the prices that we're dealing with here, we're probably still fairly priced with some room to go to make sure we shut off the demand that's here for the beans.
And also, briefly on the wheat side from the report, really about the only thing we saw there is that USDA they dropped wheat ending stocks below pre-report expectations down to 836 million bushels. Some of your thoughts on wheat from the report?
The wheat side of the report was pretty much in line. There wasn't a lot there that really sent prices moving one way or another. Obviously, it was probably a bigger follower of the corn market on the report on Tuesday than anything. But good strength today, and we're watching the global side of the equation. We got Russia looking to add more to the export taxes that they're to limit supplies. We continue to get chatter out there that we see European prices pushing higher, so there's good demand for wheat, and that's carrying over into the U.S. market. And then we'll talk about probably a little more between corn and beans, but keep an eye on spring wheat. If right now bean prices where they are, we need those spring wheat acres, and that's some of what's going on now. Is we're seeing some flow into that Minneapolis wheat market to compete against those bean acres. And when you're pushing $12 a bushel for beans, we need to see that wheat price lifted. So that could lift all three of the classes. Just seeing that strength in that spring wheat market here as we start thinking about the spring.
Well, and I want to talk about a couple of things with you today, and we've alluded to it a little bit here, but let's talk today's markets with the export side. We saw some good export sales numbers come in today, and it sounds like it looks like China is stepping in and buying more beans, buying more corn, and that seemed to maybe be the main factor behind the bullish moves higher in the market today. Is that what you saw throughout corn and soybeans, especially?
Yeah, that was probably the fuel that kind of got the fire lit a little bit this morning when those numbers came in. We rallied last week to hopefully cut back on the demand side of the equation, and obviously that didn't happen. And realistically, we didn't get any announced daily sales today, but we've sold beans 5 days in a row to China. 3 out of 4, 3 out of 5, we had corn sales. So they're still active in the market. And like I said earlier, there's just rumors that they were in the market again today. You go start looking at those domestic prices for on the Chinese front. You're talking corn probably $11.50 a bushel, soybeans maybe in that $17 a bushel window. They can easily come in here and pick up U.S. beans and corn at these price levels and put it to work over there and still be profitable. Plus, looking at the demand for soybean meal and the prices on the Dalian exchange for soybean meal, again, just keeps those crushers active. Weather into Brazil, South America still stays as a focus. Brazil seems like it's in pretty good shape. Maybe we're not going to get the maximum amount of crop that we think we're going to get out of there, but we're still going to probably have a record. But with that, it's a little bit late, and the Chinese want to keep this supply of beans moving. So a lot of the sales we're seeing now are going to be for that 1st of February delivery. And as long as the beans are getting on a boat, getting out of here, that's going to keep our supply picture extremely tight through the remainder of 2021.
Very true. And I think another thing to look at too with corn, I believe we're still the cheapest in the world when it comes to corn, John, and that's only going to help us there as well. And you mentioned Brazil looking a little better. Argentina still maybe not looking so great down there. They really need to catch some rains, and it might be too late.
That's probably the true South American weather story is the Argentina crop. They're supposed to pick up some showers this weekend. But again, longer range forecasts are turning drier. So that's probably something that add a little bit of premium into the market. Now, we did see them today announce that they're going to stay in the export market. They're going to have a commission to keep an eye on the corn export numbers. So that's been something that's been kind of moving the market lately. But even realistically, you saw even yesterday headlines came out that Ukraine livestock producers are wanting corn exports to be pulled back because they want to make sure they got enough feed supplies. You're hearing that in multiple regions. And right now, even though Argentina is still back in the game, we're still the main export game in town in terms of the getting available supplies out at this window. And it really starts to make you wonder when you keep hearing about tight supplies across the globe, who's going to provide the corn out there to feed these animals or be used in the food industries.
And we're also, long range models for weather forecasts in the U.S. are looking at maybe a drier summer across the Corn Belt. So that'll be something to watch as well, but we're still a little too far out with that. Now, John, corn market specifically, we're looking at, price levels we haven't seen in a while. And I'm hearing from a lot of producers that, they've already got rid of a good fair amount of the 20 crop here at the beginning of the year that they had left. But now they're starting to look at 21, even 22 for marketing at some of these price levels. And you got to think that there's some good opportunity out here if you're marketing out with the new crop and into 22's crop. There's got to be some good opportunity for profit right now.
Yeah, there is. And that's the question I continue to field from producers. And, that's always a hard one to answer because obviously you want to see them maximize value as much as possible. But at the same time, you got some targets that are here that we haven't seen for a while, and it's a great place to get started. To keep things going on an incremental level, be disciplined to your targets. We got a lot of things that are going to be in front of us here between now and the end of the marketing year in terms of December corn and where its prices could be. Obviously, the tight supply, the strong demand now. Then we start looking at some of the outside factors as we move into next year. What's going to happen with the dollar? What's going to happen with crude oil prices? If we see an economic recovery here and a strong demand for crude, just because we're kind of getting back to normal per se, that's going to be supportive of corn prices next fall into the third and fourth quarter. So if producers are making sales, I know that things are expensive in terms of option strategies on the top side, but you got to keep something out there that's almost like you got to have insurance to the top side this year, because you mentioned the weather. We haven't even got to that stage yet. We'll see what happens there. If that drought monitor maintains itself, it's going to be interesting to see, because we realistically need a record crop just to get ourselves back to a more comfortable level of carryout. And if that's not the case, this park could very well be setting itself up for another type of rally like this starting next fall.
And on the soybean side, we're sitting at good price levels here in the front month contracts and getting into the summer and even into some of those deferred months. We're looking at good, strong levels in soybeans here, but I worry a little bit because soybeans have kind of been on that sharper curve and sharper climb higher compared to corn, although corn has gotten a little bit of a sharper climb lately. But I'm fielding questions from producers. They're wondering about this soybean market and when, the roller coaster ride to the top of the peak could be over. Do you see anything happening with that here in the short term?
I'm looking at it as we broke through another barrier for me here on Tuesday, and now we're kind of really stretching out. Feels like we're headed to the $15 mark, at least at this window. I mean, you got a market that is very sold out in terms of producers. Maybe 95% of the beans are gone. What's probably left now is kind of the wild card beans, or the gambling beans, if you want to call it that. And that's going to take some money to pull those out. When the producer gives up that ownership, that does open up price volatility. Realistically, we're probably just kind of looking for a number right now, and where that's going to be is hard to tell. I think right now with today's move, if we can hold things fairly firm into the end of the week, we're probably set ourselves up to go ahead and challenge the $15 area on those old crop beans, just because, again, we got to shut the pipeline down, at least in terms of the market's mind, and ration these supplies. And with the market still being active on the export front at $14, doesn't sound like we're doing that yet. So that's still something I got on my radar. Plus, you go look at these spreads. That's one big thing I've been watching. You got July trading over $2 over the November contract. That's going to continue to pull money to those front month beans. And again, trying to keep those supplies rationed. At the same time, you look at November beans today, trying to break that $12 barrier. Realistically, they probably got some room to go, and that just gives you a reflection of where we could be on the front side of this thing if that starts to happen. We started the day with November being solidly higher versus the front month contracts. So, right now I still think you mentioned roller coaster. I'm not sure we quite hit the top of the big hill at this stage, the way this market is acting. So with that, though, you got to be smart in terms of using some discipline, take care of some targets, especially with new crop beans. Then again, find a way to keep some ownership in. Don't be, in my mind, greedy. Incrementally sell into it, set some targets, 20 cents up, keep moving beans out as they go. And before you know it, you got yourself a really good base, and then you can start building the put floor underneath this thing for the summer and see where things go from there.
Well, and John, overall, looking here, I think kind of maybe one of the next events that we're going to see is going to be the USD Outlook Forum, and we're going to start to get some of those acreage numbers coming in for this new crop. And you mentioned some of the money flow into wheat right now, and I think overall, corn, soybeans, wheat here in the U.S., we're really going to see a big battle shaping up here, and maybe even some producers changing their minds on what they're going to plant here as we get into the 2021 crop.
Yeah, that's what the market's basically trying to tell everybody, is that we want all your acres, regardless what species it is, whether it's corn, beans, wheat, cotton, sorghum. It's going to be a heck of a battle out there for acres. One thing to keep in mind, we got a lot of fall tillage done this year, so guys got a lot of things already established for corn. So are they going to make those switches over? So that'll be something we need to watch. Now, realistically, right, the market's saying plant beans. You look at the ratio of November beans to December corn, it's about 2.6, so it's leaning a little more towards the bean side. Maybe that's some of the undervalue that's still in that December 21 corn contract. At a 2.5 ratio, it should be about 480. I mean, we're sitting here at 460, so that we'll see how that kind of plays out. And then that's going to be kicking in here over the next few weeks, especially, like I said, when we see the outlook for them, where are those acres going to be? And that's going to be something that's going to really keep some support in this price, probably well into the 1st of March.
Livestock, let's look at that market here today. Another quiet day, a lot of negative undertones. It seemed like lower undertones, I guess would be a better way to say it, throughout cattle and hogs. Let's start with the cattle market. We've seen some sales this week in feedlot country. They were a couple bucks lower than we saw last week, and really just not a lot of support, it seems, right now, but yet we're still trading that sideways range. We still got the COVID concerns. Is there anything in cattle right now that gets you excited, or is it more just a laissez-faire approach? We're just trading where we're at right now.
Front months, I'm not very excited. In fact, I'm kind of disappointed in it right now. I was really hoping cash trade to hold in here this week, and we slipped back, 109 to 111, down a little bit. So that's where February's trading, and that's keeping the pressure on that April contract. But at the same time, we just got some heavy supplies. We're working through production, still strong. Some slaughter runs are, running steady with last week. So that's just something that's going to keep this market a little bit in check until we see that cash market come around. Now, maybe we'll get a little boost next week. Retail values are trending higher. This is typically that 2-3 week window here. We see some strength in retails, and that's showing true again. Choice carcasses at 213 at midday today. So hopefully that helps the Packers margins, and they can push a little bit more out there. The thing I've really been watching and kind of excited about and watching the strength in the contracts is those deferred contracts, August, October, December. We already got some really good numbers on the board. Now, this is reflective of what's going on in the grain prices at this stage, and the fact that we got high level costs for feed that might tighten up production even more so. And we're already expecting production to be down from last year, at least in terms of cow numbers anyway. So with that, there's some opportunities starting to brew and some more upside potential out there. Those charts look very, very strong as we continue to push to new contract highs and those deferred contracts again today. So kind of keep an eye on that. There's some value starting to build, but at the same time, I've been out there buying calls for people over top of some of those contracts with the intent that we'll go ahead and hedge those cattle up with the packer and keep the top side open and do it early and let time be in your corner. So keep an eye on that. If you remember, we had $6 corn back in 2013-14. We had $1.70 cattle. Not saying we're going to pull that same move again this year, but definitely the trend is that way. And that kind of carries over into those deferred hog contracts too. We've been seeing good strength except for today.
Well, and I know a few folks, especially with feeder cattle, they're looking at those corn prices and they're getting a little worried about it. But if your thoughts come true with the cattle industry as a whole, even with higher feed prices with corn, I think we could be seeing some good moves in this cattle market, John.
Yeah, I really want to see next week's cattle on feed numbers. I think we're at the stage now we're going to start seeing total cattle on feed 99, 98% of last year. You're seeing that a little bit right now in terms of the slaughter runs. We're about 4,000 head a week under, a day under last year. So we're starting to tighten up the picture a little bit. And with the way we've seen placements over the last handful of months, as we've kind of gotten through the whole COVID situation, cow numbers are down in terms of cow-calf operations because of the drought conditions or just whatever came into play over the summer. So here's going to be a window again. We see some tight supplies that could really propel prices. The biggest thing we need to keep an eye on, though, can we get that demand back? And again, why I like the third and fourth quarter, if we get through the spring months here, people start getting vaccinated, get the economies up and moving again, get things open. I was just reading today, the mayor of Chicago wants to get indoor dining going as soon as we possibly can and working on a plan. Those are big things for the cattle market because we do miss that restaurant trade, even though the consumer retail demand's been pretty good.
Very, very true. On the hog side, I think one bright spot I saw today, despite the negative close, the bottom end of the cash scale jumped a couple bucks up to $46, and that had to be a good sign because I think every little bit helps right now in this hog market, John.
Yeah, hog market's really struggling through the front month supplies, kind of like cattle are. We're talking near record production or record production on a weekly level due to the heavier weights and heavy slaughter runs. So that's just kept a lid on these front month supplies. Today's selling pressure came from those export sales numbers today. total numbers were pretty good, but all of a sudden China didn't show up on the new sales report today. And I think that made the market a little bit nervous. And that is going to be a variable we got to watch going forward, that if they're not active, because we're counting on them to stay active in our export market. So that was probably some of the selling pressure that came into the market overall today, just on the pure disappointment that they weren't involved. But yeah, I'm starting to see some trends that are starting to turn. Again, like cattle, I really like the deferred contracts, even though we're negative today. It was an inside day. In other words, we traded within the trading range of yesterday, as we put new contract highs in yesterday. So consolidation. Again, if grain prices stay strong, you'll probably continue to see some bids out there pushing those cattle prices, or excuse me, the hog prices higher. Just trying to encourage producers to go ahead and keep bringing hogs forward, even though we may have expensive feed supplies.
John, any thoughts on the dairy market? Looking at milk futures today, looked like some decent numbers there. But any thoughts on this dairy market overall as well?
Well, dairy market's been waiting for an announcement from the USDA regarding the Farmers to Family Food Box program. So we're softer most of the day today. Late this afternoon, it came out that they're going to start stepping in and purchasing dairy products again for food pantries, as well as that food box program. And all of a sudden prices are waking up here in the afternoon session. That money going into that milk market is so key. We jumped off that announcement when we got the last aid package put together, another 1.5 billion going into the market. And now, like I said, the USDA is starting to roll it out. We were looking for some dates, and those dates are coming when they're going to go ahead and start stepping in and purchasing products, and the milk market's starting to react accordingly. Again, though, we got a lot of supply right now. Obviously, feed costs are going higher, so that's going to be something that could be a factor longer term in this market. So we'll have to see how things play out. It's all going to be about the demand, and eventually the government will step back out again. So be prepared for a bit of a wild ride here for the next month or so, especially if the government stays active in terms of supporting the dairy products through food box and food aid.
Well, John, always appreciate your time and a lot of great insight. Any final thoughts you have for us today?
Well, again, volatility is going to be the key. There's a lot of big macro trends that are out there that we're really keeping an eye on, between U.S. dollar, energy prices. Tonight, President-elect Biden is going to be announcing his COVID aid package. Sounds like it's going to be close to $2 trillion maybe coming into the system. That's going to pressure the dollar, which will be friendly for commodities. Right now, we're in a bit of a commodity bull market across the board due to that weaker dollar and the money flow that's moving into the market on the inflation side. So it's going to be pretty eventful, for lack of a better word, over the next few months here. So, but volatility brings opportunity. So stay disciplined at targets, lock in profitability when you got the chance, then find your way to shift the risk to other forms of strategies to keep yourself in the marketing game for the year.
Well, John, if producers want a little insight, I know they can learn more at totalfarmmarketing.com, or they can send you an email, can't they?
Yep, love to chat with them anytime. Give me a call, 800-334-9779 is our phone number as well. Or my email is jonh@totalfarmmarketing.com.
John, appreciate the time. Have a great weekend. We'll talk to you next week.
Sounds great. Have a great week, everybody.
John Heinberg with Total Farm Marketing by Stewart-Peterson joining us today here on Market Talk for Thursday, January 14th. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.